you've got to look at the long term in gold, and over the last few years we've seen really strong demand out of Asia, and that's really sucked all the readily available gold out of the West, and it's tightened the market up. The Brexit to me is a sideshow. Some people think it's a lot more important, but I just see it as a short-term thing. But it basically means more people are coming into the market looking for gold, and they're finding there's not much there. So gold has got the potential to rally quite strongly. I think we're certainly going to see 1400 quite soon, and I think we'll certainly see 1500 by year end, and maybe even that 1900 test that previous high. Gold does have that ability to run very quickly.
Okay, so you think it's in the early stages of this up leg. Now, there's so many gold-related companies to look at. Split them up for us. Who do you have your eye on when you're talking about Australian companies and North American gold miners or gold-related stocks?
Well, I like to focus on the Australian market, which I know reasonably well, and there's probably half a dozen stocks that everyone should have in their portfolio, and there's probably another 30 or 40 stocks that they can choose from that are smaller stocks, growth stocks, emerging opportunities to look at. Now, if you look at the gold price at the moment, we've got $1,800 in A, and that's a big price, and that means that almost every company is making about $700 to $800 an ounce margin, and that's a lot of money for the big producers. But there are a lot of small emerging players coming through that might only be in production later this year or next year. But just looking at their market caps at the moment and their potential revenue and operating surpluses, my universe of second liners is still on a PE of less than 1. So there's huge upside in a lot of stocks outside the big six.
Barry, Dan here. Wanted to go back to your core argument on gold because Wells Fargo disagrees with you completely. They say it's time to cash in on gold because the rally is over and gold has run its course. I'm just wondering if you could elaborate on some of your key risks that you see to the downside for gold, even though you are calling that potential 1900 level.
I don't see much downside at all. You talk about it being a crowded trade. It's not. Most people don't have any gold. Most people have very few gold stocks. The funds management business here in Australia is very much underweight gold stocks. So all the signs of it being overheated are simply not there. I look at this market pretty closely, but as I said before, it's Asian demand, and that's physical demand. And we've got the Shanghai index and the Dubai index. They're going to be the price setters. It's not going to be New York anymore. So you can forget about most of your North American commentators because they've got it wrong for so long. You've got to look at the real supply and demand. And if you look at jewellery demand plus central bank buying plus the ETFs, that's bigger than mine supply and scrap supply. So we're running down inventory all around the world, and given that most of the gold inventory is tied up in jewellery in India, not a lot of that is available anymore. So it depends what you're focusing on. If you're going to talk about the Fed and interest rates and the US dollar, you're going to get it wrong because the US dollar's been going up and the gold price has been going up with it.